Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Lpl Financial Holdings Inc. Annual Report. Lpl Financial Holdings Inc. offers a wide range of services to independent financial advisors and institutions across the United States. The company's brokerage offerings include various investment products such as annuities, mutual funds, equities, fixed income, alternative investments, retirement plans, and insurance. Additionally, LPL provides fee-based platforms that offer access to a variety of investment options. The company also offers retirement solutions for both commission and fee-based services, allowing advisors to provide brokerage services, consultation, and advice to retirement plan sponsors. Furthermore, LPL provides other essential services, such as tools and resources for advisors to maintain and grow their practices, trust and investment management oversight, custodial services for estates and families, an advisor-facing trading platform, insurance brokerage general agency services, and technology products including proposal generation, investment analytics, and portfolio modeling. In summary, the company's list of businesses and services includes brokerage offerings, annuities, mutual funds, equities, fixed income, alternative investments, retirement plans, and insurance fee-based platforms. Access to mutual funds, exchange-traded funds, stocks, bonds, options strategies, unit investment trusts, institutional money managers, and no-load multi-manager variable annuities retirement solutions. Commission and fee-based services for brokerage services, consultation, and advice to retirement plans sponsors other services. Plus tools and resources for advisors to maintain and grow their practices, plus trust and investment management oversight, plus custodial services for estates and families, plus advisor-facing trading platform, plus insurance brokerage general agency services, plus technology products. Proposal generation, investment analytics, and portfolio modeling. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what might cause an Lpl Financial Holdings Inc. stock price drop. The stock price of any publicly traded company can fluctuate due to various market and economic factors. One possible reason for a decline in stock price is poor financial performance, such as decreased revenue or increased expenses. This can lead to reduced investor confidence and a subsequent decrease in the stock's value. Another factor that could contribute to a drop in stock price is regulatory issues or changes in industry regulations. If a company fails to comply with new regulations or faces increased scrutiny from regulatory bodies, it may experience a decline in its stock price. Additionally, external market factors such as economic downturns, interest rate changes, and shifts in investor sentiment can also impact a company's stock price. For example, if the overall economy is experiencing a recession, investors may become more risk-averse and sell their shares of companies that are perceived to be vulnerable. Lastly, internal issues such as leadership changes, product or service failures, or negative publicity can also contribute to a decline in stock price. If a company's management team is unable to effectively lead the organization, it may struggle to adapt to changing market conditions, leading to a decrease in its stock value. In conclusion, there are several factors that could cause an Lpl Financial Holdings Inc. stock price drop. These include poor financial performance, regulatory issues, external market factors, and internal company issues. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for various companies can be categorized into several key areas. Acquisitions play a significant role, with many companies citing them as a major contributor to revenue expansion. This includes both asset acquisitions and business combinations. Revenue from services provided to related parties is also a notable driver, often generating significant contributions to overall revenue. Interest income from client receivables, advisor loans, and other sources is another key factor, particularly in companies with large client balances or loan portfolios. For companies with asset management-based business models, asset under management, AUM, growth and net new assets are critical drivers of revenue expansion. Additionally, commission revenue streams, such as sales-based commissions and trailing commission revenue, are significant contributors to overall revenue. In some cases, annuity and mutual fund sales can also drive revenue growth for companies that sell these products. However, it's essential to note that the specific details and impact of these drivers can vary widely from company to company. The company's net income experienced a decline from $1.1 billion in 2024 to $0.9 billion in 2025, representing an 18% decrease. This downward trend continued with a 19.4% drop from $1,066,250 in 2023 to $863,024 in 2025. The net income margin also suffered, decreasing from 8.6% to 5.1%. Conversely, the gross profit margin increased from 36.3% to 33%, while the EBITDA margin declined from 17.1% to 12.9%. The reasons behind these changes are multifaceted. Various adjustments, including amortization of other intangibles and acquisition costs, contributed to the decrease in net income. Additionally, regulatory charges had a negative impact on the company's financials. On the other hand, an increase in adjusted EPS was attributed to a decrease in tax benefits and an increase in adjusted net income. The company's compliance with ERASA regulations and tax-qualified plan laws is crucial to avoid penalties. Regulatory requirements may also restrict business conduct or growth, further affecting the company's bottom line. These factors collectively contributed to the decline in net income and profit margins over the specified period. The company's operating cash flow has been inconsistent over the years. While there have been instances of positive operating cash flow, such as in 2024 and 2023 with $277,589 and $512,611 respectively, there have also been periods where the company generated negative operating cash flow. In fact, in 2025, the company experienced a significant drop to -$411,404. However, it's worth noting that in some years, such as 2024 and 2023, the company was able to generate positive operating cash flow. The company's debt level has experienced significant growth over the past year. According to various reports, the total credit agreement net debt increased from $5,037,600,000 in 2024 to $6,829,300,000 in 2025, representing a substantial rise of approximately $1.8 billion. Similarly, corporate debt and other borrowings, net increased by 32% over the same period. The increase in debt level has led to a corresponding surge in interest expenses. Interest expense on borrowings rose from $274,200,000 in 2024 to $403,400,000 in 2025, marking an impressive growth of nearly $130 million. This represents a staggering 47% increase in interest expenses over the past year. The rising debt level and associated interest expenses have significant implications for the company's financial health and future prospects. As the company continues to navigate these challenging economic conditions, it will be essential to closely monitor its debt levels and interest expenses to ensure that they remain manageable and do not compromise the company's long-term sustainability. LPL Financial's management emphasizes investing in organic growth as the primary strategy for driving future success. This approach involves focusing on internal development and expansion before pursuing external acquisitions. The company has also implemented an enterprise risk management framework to navigate uncertainties and make informed decisions. To adapt to a changing regulatory environment, LPL Financial is reviewing its product and service structures and fees. Additionally, the company is investing in technology and operations to improve its service offerings and position its advisors for long-term growth. This includes managing interest rate risk through strategies such as locking in interest rates for certain debt and monitoring fees for deposit sweep vehicles. The company's focus on liquidity and capital management ensures that it has adequate net capital to meet regulatory requirements, supporting strategic initiatives while maintaining financial stability. Overall, LPL Financial's strategy prioritizes long-term growth, adaptability, and risk management, positioning the company for continued success in the financial services industry. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company has purchased Commonwealth for $419 million, including transaction bonuses and other fees. This acquisition is expected to have ongoing costs of $86 million in 2024 and $7 million in 2025. Additionally, the company acquired Atria Wealth Solutions, Inc. in 2025 and Blaze Portfolio Systems, LLC, at an unspecified date. The company has also made divestitures, including the sale of 7 introducing broker-dealer subsidiaries to Atria in 2025. Furthermore, Commonwealth Equity Services, LLC, is expected to be sold by the end of 2026. These transactions demonstrate the company's efforts to restructure and optimize its operations through strategic acquisitions and divestitures. The company's financial activities have been marked by a commitment to returning value to its shareholders. One key aspect of this is the payment of dividends, which has been confirmed through various sections of the report. This indicates that the company prioritizes rewarding its investors with a share of its profits. In addition to dividend payments, the company has also engaged in share buybacks. A notable example of this is the $2.1 billion increase to the share repurchase program authorized in 2022. Furthermore, specific details are provided on the company's spending on share repurchases, including the purchase of 289,371 shares for $100 million in 2025. These actions demonstrate a proactive approach by the company to enhance shareholder value through strategic financial decisions. There are valid concerns about inventory buildup or supply chain disruption in certain business operations. A notable example is the presence of $4.8 million worth of borrowed securities with a contract value exceeding their market value on page 81. This discrepancy suggests potential issues that may impact financial stability. However, it's essential to note that inventory management losses or gains are often attributed to market fluctuations rather than supply chain disruptions. The terms long inventory positions and short inventory positions mentioned on page 127 imply a focus on market-related risks rather than logistical challenges. That concludes the financial summary for LPL Financial Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.